Hola.
How's it going, brother? How are you?
Good, thanks.
You speak English?
Yeah, a little bit.
Where are you from?
Check.
Oh, you're from Czech Republic?
Yeah.
That's sick, that's sick. Do you watch any football or?
Yes, of course.
Oh, yeah, yeah. What team do you support? What's your team?
Barca.
Okay, let's go, let's go. No Real Madrid, no Cristiano
No,
Ronaldo.
no, no.
No. I don't think anyone's gonna join today, bro. If you want, we can just do a quick one-on-one. You have any questions, you can let me know.
Okay. Okay, thanks.
Yeah, yeah, for sure. I'll share my screen right now. Do you see my screen?
Yeah.
Oh shit, hold up. Share screen. Alright, boom. Alright, there we go. We got another person in this. Just quickly go like that. Hold up. Just give me a quick little sec. I'm trying to fix this up. Alright, admit all. Alright, so today I'm just gonna do a quick little market overview. I'm gonna meet everyone quick time. And then if you guys have any questions, just leave them in the chat and I'm gonna get back to you guys. But so today I'm just doing a quick little market overview of everything and what I'm seeing upcoming for the next week. And if you guys have any questions, literally let me know in the chat once again and literally I got you. Don't worry. So just want to make sure everyone can see my screen, right? Everyone see my screen? Just say in the chat if you can see my screen. Let me get like a one or like a yes. Alright, perfect. Let me just alright, boom. So before I get into what I see happening next on GU, by the way, it's being recorded, so yeah, you don't really worry about that. But yeah, so I want to go over quickly this buy that we did catch. I think it was 2 weeks ago on GU. It's a swing buy. So let me just quickly go over everything. So let me put a brand new chart. Let's go right here. Boom. So when GBP USD was just about over here, we anticipated a buy opportunity from the low from this area right over here. So let me actually go completely in depth on why. So we can see from a macro perspective, GBP USD is definitely in a bullish state of mind. So you can see that overall on the daily time frame. We have a high, we have a higher low, and then we have a higher high, a higher low, and then a higher high. The best way to identify your higher lows and higher highs is simply just by finding like those major swing points in the market. So for example, I know a lot of the time some people have issues with marking up the true higher high, true higher low. The best thing to do in situations like these is to find the biggest pullback. So for example, this is where that biggest move started. This is where that biggest move finished. This is where the biggest pullback started. This is where the biggest pullback finished. This is where the biggest impulsive move started, and then this is where the biggest impulsive move finished. So this way you're completely ignoring all the price action that happens within here. So all this stuff happening here, you're completely getting rid of it, and it's less confusing that way. So that's what macro structure is. The micro structure would be the structure inside of this, so like every single higher high and higher low, but we're not really focusing on that. So just looking on the weekly time frame of GBP USD, we could see that overall on the weekly time frame, it's definitely bullish. No doubt about it. It's 155% bullish. So from here, what I did is I went down to the daily, and just because right now on the weekly there isn't too much information for me to gather, right? There's not information, so I have to go into the daily time frame. So on the daily time frame, what I did notice is that we had some liquidity resting right here, equal lows. So it was interesting to me because if there's liquidity over here, that means that the market has to break below it. We have to break below this level to take out all these stop losses, and then we're going to go up. And that also indicates that this is going to be a break of structure, because this is that last higher low that price created a higher high with. And if the market does break below it, that means that we just broke structure of a weekly higher low. So that could indicate a possible reversal for GBP USD. So what I did from here is I was mainly just focusing on the buy, right? So what I did from here is I think I went down to the 12-hour time frame. Before I do that, let me show you why. So I was focusing on this order block right here, this last institutional bearish candle before that major move up. Now to the naked eye, you might think like, okay, it's already tested, there's no way it's possible. Well, this is why I always tell you guys to look at the 12-hour time frame. The 12-hour time frame is the best time frame for order blocks in my opinion. It's so clean. Like, just look at this. Look how clean this is. And like I talked about my confirmation of higher probability order blocks versus lower probability order blocks that are formed in the way of clearing liquidity are much more stronger than any other institutional candle. For in this case, we see that price created these equal lows right here and then created these equal highs, and then this 12-hour institutional candle was created in the form of taking liquidity out. So this candle in itself stopped out a lot of buyers who were buying this support zone right here, and the fact that we took out all those stop losses and then bounced all the way up, it gives us a good indication that this is going to be a strong area of interest. So we have about like 2 to 3 confirmations right there. Now, from looking at the institutional market cycle perspective, we could see that, all right, this is where we had consolidation. This is where we had that stop out phase where the market stopped everyone out, taking out all those stop losses, and then this is that impulsive move that we were focusing on. Let's make this black, just make this a little nicer. Boom. So I made a video on this, by the way. If anyone is not aware of this, go check the course out. But yeah, so we have this consolidation phase. This is that phase where the market stops people out, and then this is that impulsive phase that we're looking to get in on. So the fact that this order block has about 5 to 6 confirmation itself is extremely valuable. And now I haven't even talked about the fact that we have liquidity here, which makes it even better. So basically, I was anticipating a move that the market would fall down into this area of interest to stop out all these people. Because think about when retail traders are entering the market, they're gonna have stop losses scattered all around, like maybe some over here, some over here, some over here, some over here. It's hundreds of millions of dollars just stacked on stacked on stacked. So the fact that we have money resting in here, you have to think of liquidity as like a physical money thing. Like basically the liquidity over here means that there's money inside of our point of interest, and that's why the market taps into our point of interest to go away, because it needs to go down, pick up all that money, and then go away from it. So let me go on my real chart to make this a little cleaner. And yeah, so we basically anticipated the move down into here. Now let me go to show you what happened after price came in here. So I'll go down to the smaller time frame. Let's go down to the 30. So as price action was making its way into our point of interest, I was patient. Remember, whenever I have my analysis set, I literally go away. All I do is I click on my zone, I right click it, and I add an alert. So click on alert. Since I'm back testing, I can, but whenever you're finished your analysis, set an alert at wherever your point of interest is and go away. Trust me, like sitting on the charts 24/7 isn't gonna do you any good. It's not gonna make your trade happen any faster. Matter of fact, when you stare at the charts, you're just gonna end up seeing things that aren't actually there, and that's something that I had to go through myself. So as price action came into my point of interest at this point, I remember I didn't enter with a limit. I had I waited for confirmation. So right over here, I think it was, yeah. So looking at price action on the 30-minute, I saw that the market created this low, lower high, low, lower high, lower low. So we saw these lower lows, lower highs come inside of our point of interest, because this is what caused price to come down into our area of interest. That means that up until here, all the way till here, it was straight sell pressure. So you have a range now. You have a range from let's just do this. You have a range from here up to here, and this is all selling pressure. All this noise over here, all this price action that I'm highlighting, it's all selling pressure. What we need to see is this selling pressure get diminished. We need to see this selling pressure get broken and taken away with buying pressure. So once I saw price action come inside of our point of interest, and we saw that the market broke structure right here. If you go down to the 15-minute or the 5-minute, it's a lot cleaner. We see this clean lower high that created a lower low, and then the market broke above it, giving us a break of structure. So at this point, I said, all right, I'm gonna check all my time frames. Let me go down to the 1 hour. On the 1 hour time frame, I don't see anything. So let me go down to the 45. On the 45-minute time frame, I can see a clean institutional candle right here. Now you might ask me, why did you take the entire thing with the wick? Well, if the candle itself has more what do you call it? Like, if the candle is thicker than more the wick, if there's more candle than wick, if there's more body than wick, then you only take the body. And this is 18 pips worth of body, and then eight pips worth of wick, so you'd only take the body in this case. And then I went down to the 30-minute and I refined it a little bit more down to here. I did extend my stop loss down to here just because, so in certain situations you could extend your stop loss. In this case I extended my stop loss because I wanted a wider stop loss, a deeper stop loss, just in case if the market taps me out by like, you know, a pip and then, you know, goes up. I was trying to avoid that by all means, so I just took the entirety of the candle and the wick itself. So I put my stop loss right here. So at this point I told everyone to set limits, which I think a lot of you did, so we did set limits right here. And GU slowly made its way down to our entry. From here it tapped us in. Now we had a good reaction. From here, let me show you exactly what I did and how I managed my trade. So once I'm in the trade and I'm in, I try my best to not look at the money. Don't look at your MetaTrader, look at Trading View. The MetaTrader is just money, you know, it's subjective, it's money, it's gonna, you know, get you emotionally triggered. You might say like, oh shit, you know, like I'm up $1,000 right now, and then you see the market pull back. Because imagine this, just imagine this right now. Imagine you're in profit, right? You see it react off of your point of interest nicely, you go in profit, but then the next candle closes like this. If you're looking at the money, then you're gonna be like, oh damn, you know, I'm up $2,000. But then the second you see this one deep candle, you're like, okay, yeah, I'm gonna get stopped out, I'm gonna close early. And that's one of the biggest problems with looking at money, and it'll solve your issues with having emotional things like that. So we got triggered in, and at this point I'm simply just looking at the chart. I'm not looking at my money, I'm looking at the chart, and I'm just seeing how the next couple of hours close. So the next hour candle closed pretty decently, and so did the next one. My main objective was to see candles break above this high right over here, because this is that last high that the market was holding. This is that last high that the sell side pressure was still there. So once we do break above this high right here, that's my indication that we're going to be going towards, you know, the next areas of interest. And boom, we broke above this high. So this told me that, all right, GU is definitely bullish. We switched structure. We can see that there's lower lows, lower highs being made right here. But as soon as we came into my point of interest, we consolidated and then we switched structure going up. So once I saw this, I already knew that, all right, GU is going structure. I have to find where it's going to head next. Where's the possibility of GU potentially going to, you know, reverse? So then I went down to my 4-hour time frame, and I noticed that inside of this consolidation area, we did see an institutional candle right here. And there's a possibility that GU might come in here and then reverse. So I was basically saying, all right, I'm not going to look at the charts until GU comes at this point of interest. But because there's also liquidity of equal highs resting above over here, that's a good indicator for me to tell me that, all right, price action has a good probability and chance of the market completely just shooting up from here to, you know, breaking all this liquidity. Because remember, liquidity basically tells you where the market is going to head next. Institutional candles just tells you where the market is going to react potentially. So yeah, we might give a small reaction off of this institutional candle, but liquidity is always more superior. This liquidity tells me that there's money resting here. It's like, imagine you walk by $50 and $5. You're going to pick up both, right? And that's what's happening with the market. It sees an institutional candle and it sees liquidity. It takes the, you know, it reacts off of this institutional candle a little bit, but overall it's more attracted towards the liquidity, just like how you would be more attracted to the $50 versus the $5, but you're still gonna pick up both. So that's basically what was my initial thought process, and let's just play this out. And you could see from here we ended up clearing the liquidity, and the market did end up reversing a little bit to come back down. So overall, this is going to be an overall 521 pip take profit. Right now we're just running shy over 281 pips. Not bad. We took 50% partial, so, and we moved our stop loss to break even. So let me go over what I do see happening next on GBP USD, and then we can talk about you know, what I see long term happening, and this is going to be a crazy trade. So what I see happening next is I'm on the 8-hour time frame now, because remember, when I'm looking for re-entries, I'm never going to go down to the 15-minute or the 1 hour and I'm going to say, okay, yeah, I'll zoom out and, you know, I'll enter right here, because to me this is so confusing. Like, you see a major move up, you see this consolidation, major move up, consolidation, major move up. There's no clean institutional candles, right? And you might say, okay, what about this one? But if you zoom out to the 4-hour time frame, in reality you're wrong, because this institutional candle might not be correct. They might want to make a deeper retracement down to this one. So that's why I like to stick to the higher time frames, to use the higher time frame candles when I'm looking for higher time frame re-entries. So I hope you get what I'm trying to say. If it's a higher time frame re-entry, use the higher time frame candles. So I'm on the 8 hour time frame at this point, and the best thing that I was really seeing was this fat, you know, bearish institutional down candle before a major move up. That one took liquidity out, two broke structure because we could see that we have a high, higher, lower high, lower low, higher high. So we broke structure right here. We took liquidity, and yeah, and that was all in the form of this institutional candle right here. So my thought process now is, all right, if GU does want to come back, it's most likely going to be coming back down towards this last bearish candle before that major move up. Now let me actually just remove this because this is getting a little annoying. I don't like to have too much lines on my chart. Let me just make this nicer. And boom. So now another possibility. If I go down to the 12 hour, I think it was 12 hour wise, you could, you know, take this entire big 12 hour institutional candle, and this is pretty big, I'm not gonna lie. So I'm gonna go down to the 11 hour and try to refine this to the best of my ability. So 11 hour, not much. 10 hour, not seeing much. 9 hour, you could take it from this, but not much. 8 hour, once again, you could refine it up to this one, which is, you know, a lot better. 7 hour, same thing. 6 hour, same thing. 5 hour, same thing. 4 hour, you could take it from here, and then 3 hour, and then from a 3 hour time frame, what I can see is now this one right here. So this is a lot cleaner now. We can see this small institutional candle right here, and it wasn't tested at all. So now I can refine my 12 hour institutional candle down to my 3 hour time frame. And what confluences do I have to take this trade? Well, let me take my Fibonacci out and let's measure this. From the Fibonacci perspective, this is in our discounted zones. Now it's not completely discounted because it's just above the 70%, but it's near around that level, and as long as it's near, it's still discounted in my opinion. So that's another confluence we have for why price might want to react off of this one. And if it doesn't want to react off of this one, we have our backup one, which would be all the way down here. Now this would be extremely unfortunate because that would mean we get stopped out at break even. I doubt price is going to come down here, but it's good to have be prepared for everything. So someone asked, do you think entry could be at the level of the equal low below, or to find the OB entry? Oh, I think you're talking about like this, right? Yeah, so you should have refined it. I waited for confirmation, but if you wanted, you could have entered with a limit at the 12 hour and stop loss just at the low, and that would have been perfect, right? You wouldn't have gotten stopped out. So that's what I'm seeing happening next. I see the next buy pressure on GU is coming down into here and then going up. But from a longer term perspective, let me show you what I'm actually seeing now, because GBP USD is looking a little bearish to me. How many pairs do you trade? Well, honestly, I'm experimenting now, but these are all my pairs. I'll just show you. Sorry. So this is my GBP pairs and Euro pairs. So we have Euro JPY, we have Euro USD, GBP JPY, and then GU, and then my, you know, non-GBP pairs are USD CAD and gold. So this is all I really trade nowadays. I'm trying to just stick to these, but that's because I backtested these and I understand these pairs. So yeah. So let me go over what I'm seeing now on GU. So I deleted everything. Let's go over this. So like I said before, this was a strong weekly higher low that created a higher high. This is a high, higher low, higher high. Now let's actually see if this was a sufficient higher high. So let me draw this right here. And yeah, it was. You can see that we broke above this high with a new high. So that confirms that this last higher low that we're looking at right here did indeed create a higher high. But we broke past it. We broke past that. And like I said before, if we're breaking past a previous higher low or a higher high or a lower low or lower high, that's basically indicating a reversal. So let me show you what I mean by that. So we did see stuff like this happen, right? But then out of nowhere, we see this happen. We see a break of structure. Now, even though this break of structure was to just, you know, take liquidity, it was a big break of structure because this was a weekly higher low that created a higher high. So basically what I am anticipating is that the market will come back towards this initial area that was the start of that break of structure. That was the start of that major move down that broke structure right here. Everything in trading is about swing point higher highs and higher lows. Some people ask me, all right, how are you catching the bottomest entry? How are you catching the best entry? Well, it's because I'm not looking to enter when price is over here. even if price was over here right now, I would have a million people coming in my DMs like saying, oh, what are you going to do to catch this big move? I would say, well, I'm waiting for price to come back down to here because that's the best possibility for an entry I have, right? And that's what I'm doing. I'm catching the swing point low. I'm looking to catch the bottomless entry. Basically, just find the major move up that's untested. That's literally it. That's the best way I can explain it. Find that biggest major move up that's untested and wait for price to test that level because that's initially how trading goes. So what I do see happening now on the weekly time frame, let's go towards the weekly. On the weekly time frame, clearly we see that this is a break of structure, 125%. Right, clean break of structure. Now, to catch the entry, for the sell, you could refine this institutional candle right here, this last bullish institutional candle before that major move down, and potentially look for sells inside of this area. But obviously, this is way too big, so I'd have to refine it. But one more thing I want to drag your attention to is the fact that we have imbalance right over here. We have inefficient price action right here. I'll go over gold right after this one. So we have insufficient price action right over here. That means that the market has to come up and mitigate this level to go back down. So we have a reason for why price has to come here and over here. So let's go down to the daily time frame now, and boom. On the daily time frame, this is a lot more confusing because look how big this zone is. So what I would do is I'd refine it down to this institutional candle right here, this bullish institutional candle before that major bearish move down. And I wouldn't expect GU to just randomly wick above because this is the cleanest institutional candle we have. Now also from a Wyckoff perspective, right? From a Wyckoff perspective, I don't want to go too deep into the Wyckoff, but the best way to identify your Wyckoff is look for 3 moves up. So in a distribution, we know the distribution happens at the top of an uptrend and then the market reverses, right? Basically what I do see is before the market reverses, you're going to see 3 moves up. So one move going like this, second move going up again, and then third move, and then the market reverses. It's basically 3 moves up and then a reverse. Right here what we can see is 1 move, 2 move, and then the third move, and then the market reverses. And like I said, the last point of supply is just the last order block before that major move down. So I could say that this is my LPSY. I hope that made sense. If you want, I could go over Wyckoff, but I'll make a PDF over this just later on in the day, but I don't want to go over Wyckoff right now because we'll be here forever. So yeah, so basically what I'm anticipating now is GU to come into this point of interest right here. I want to see it come into this area of interest and then reverse all the way back down to maybe over here to tap into this bullish institutional candle. So yeah, okay, let's go check the 12-hour. Boom, like there you go, there you go, 12-hour institutional candle right here. Clean 12-hour institutional candle that price can come into. But the thing with this is the daily institutional candle was so big that I rather wait for price to come into the daily institutional candle, show me a schematic, and then I take the sell after confirmation. The reason I'm a bit wary with the 12 hours is because we still have all this candle over here that we only mitigated up to 50%. So if I measure this, institutional candle, you can see we only mitigated it up to the 50%. There's still about over 50% of this candle left, right? So maybe if you go down to the 8-hour time frame, you might find more, and there you go. On the 8-hour time frame, you see another institutional candle right here. So this is why I'd stick to the higher time frame IC, and I would literally just wait for confirmation. It makes it so much easier. You don't miss the trade, and overall it's just way better. So hopefully my anticipation is we wait for GU to come into here, and then we catch the sell all the way back down to this major low right here, and that would be really good if that's what happens, obviously. Now someone wanted me to go over how do you define a clean OB. Watch the videos on the course, I went over that a lot, but a clean OB is usually one that's literally visually just clean. Like for example, this institutional candle, it's a nice big bullish momentumous candle before that major move down. It's followed by a major move down. Now if I'm looking at something like over here, is this a clean IC? Not really, right? Because there's one right here, there's one right here. It's just all over the place. This one is a clean IC, is one that you could just see and you already know it's clean. That's the way I like to define them. I'll go over this chart right after you. Let me just quickly check this up. So that's GJ. I'll get into GJ. I have something for GJ as well, but that's GU, and let me go over gold quick then. So gold is something that we're gonna have to go over as well. This is a nice dirty trade. I can't wait for the next week to play out. But yeah. So GU, or gold. I mean, sorry. I've been looking at GBP for way too much this week. So basically, what I did see happening on gold was we had this major move down, major sell off on gold. Basically, gold just crashed. From here, it crashed about, what's that like? I'm not even trying to read that number. Yeah, math is not my thing. I'm not reading that number. No way, but definitely a ton of pips. That's a ton of pips right there. So as soon as we broke down, we reached this point right here, a selling point. This is the point where all this sell pressure stopped and that bullish momentum started. Let's look at structure now. Literally, let's just keep it simple. Look at structure. We have a low, a lower high, lower low, lower high, lower low, higher high. We break past this lower high right here, indicating that overall gold is now moving in a bullish structure. We're trading from structure to structure on gold. With gold, we're not really looking for macro structure on the daily time frame or the weekly. Gold is more of a structural trading thing that you want to trade on the 4-hour time frame rather not the weekly, unless you can use the weekly. So if you can use the weekly, then use it. So one thing I did notice is that after we did break structure, we how did I mark this up? I think it was on the 12-hour. Yeah, we saw a clean 12-hour institutional candle right here. Now, you could have taken it from here. I didn't take it from here. I took it from this point down to like this point right here. I refined it a little bit, I think, to the 8-hour. I took the 8-hour IC, but like I said, if you want to have a deeper stop loss, then by all means, extend your zone, and that's what I did. I put my stop loss right here. But before gold actually tapped into our point of interest, we created a ton of liquidity. We created all these equal lows right here. And then that means that there's liquidity all over the market resting over here. There's money. There's hundreds of millions of dollars resting inside of these levels. And that's why gold made a major move down to take out all that money. Now, after we did take out all that money, what was here? Well, there's an institutional candle. And like I said before, if an institutional candle takes liquidity, it becomes stronger. Right here, we see this IC down here, swept liquidity, taking out all those stop losses, and then we reversed, which broke structure. So we broke structure, we took liquidity, and thirdly, we are also discounted. We're in a discounted price zone. So once price did come into this level right here, we got entered and triggered in automatically with a limit. Like I said, with gold, I always enter with limits. I try not to enter with confirmation too much, because more or less I end up missing it. So what our take profit is, basically we're targeting the 8-hour levels that caused that major move down. Because remember, on the higher time frame, let's go to the daily time frame right now. Let's just look at structure on the daily. On the daily, we did see that this higher high, higher low, higher high, right? But then what happened? We broke past this higher low right here. We created another break of structure. So that means that gold has to come back up towards those initial levels that broke structure. So what I did is I went down to the 12-hour and I found a bunch of institutional candles. I found one right here, this 12-hour institutional candle, and then I found one 8-hour institutional candle right here. The thing I like about both of these is both of these are at the tops. Like I said, I like to enter at the highs. They're all at the highs, meaning that this level in itself created, 1, a big move down, 2, broke structure, and 3, it's premium. If we take our Fibonacci from the high all the way down to the low, we can see that premium, and they're both premium. What do you say there about limit? Why not gold? This what you said. The reason I don't look for confirmation on gold is because gold isn't a pair that likes to give you those sniper entries. Once it's in your zone of interest, it usually moves away from it right away. It doesn't like to consolidate, sit in there. It likes to move away quickly, because gold is a super volatile pair. The only times I usually see it consolidate is maybe around when it's creating liquidity to stop people out. But usually when a move like this happens, the next move that's going to be followed up is another big move right away. So watch the Zoom calls. I posted a video on why I don't look for limits on, or why I don't look for confirmation on gold. But yeah, so yeah, we're basically looking for a target of 943 pips. The way target pips work on gold is you remove the last 0 at the end. So well, it isn't bearish, because after it tapped into our point of interest, look at how it's consolidating. It's indicating that the market is now finishing with this overall bearish move, and now it's consolidating, showing us a shift of market structure. And if you even want to go down to the 1 minute time frame to get a better view, you can see that we already have breaks of structure on the 1 minute. We can see lower low, lower high, lower low, and then the market goes up, breaking structure right over here. So we do have that break of structure, and when you are in the trade without confirmation, that means that you have to look at the structure while you're in the trade. So while I was in the trade, after I got triggered in, I was looking at structure. I was making sure that overall, gold is following this bullish momentum. And secondly, you have to look at concepts such as imbalance, liquidity, and market structure. For example, market structure, yeah, it was bearish. We can definitely see that market structure was bearish, but we still have institutional candles over here to pick up, and then we have institutional candles over here to pick up. We also have a ton of imbalance over here to get. So we have imbalance right here. We have more imbalance maybe on the 4-hour time frame. So we have multiple reasons for why gold has to go up. Basically, it has to. It cannot leave all this imbalance and liquidity just to go down. And if it does do that, well, that's a sorry loss. But we know what's gonna happen next. That means that gold is most likely gonna be targeting these lows over here. Okay, I have about like 10 more minutes, then I have to end this because the meeting is getting a little long. But yeah, so that's what I am seeing for gold. Waiting for gold to push up from here. Yeah, for sure. I was recording this. I was recording this the entire time. So yeah. So USD CAD, great entry, beautiful trade. I'm not sure if you guys caught this one, but yeah, I made a video on this as well in the course. You guys should check it out. But yeah, USD CAD came into this IC. We entered right away, and our TP for 360 pips got taken out. Beautiful trade in my opinion. Loved it. Now what I see happening next is once again price coming back towards this 4H institutional candle right here. It isn't a premium level, right? If we measure this, it's definitely premium. I'm basically waiting for USD CAD to come here, and then we can look for confirmations or schematic on the lower time frames to catch that sell all the way down to potentially these areas of liquidity here. That's what I'm expecting at least. Now let me go over GJ quick time. I already went over GJ. I made a GJ case study for the people who haven't watched it. Go watch it right now after the Zoom. I'm looking to sell here and here. We're looking for confirmation. So yeah, make sure you guys go on GJ on the case study and watch it out. It's on the course. Now Euro USD. We have an extreme point of interest right here. We have liquidity resting here, equal lows. That means that the market has to tank below to take out those lows. And then we have a institutional candle on the 12-hour, I think it was. Maybe the 8-hour, I'm not too sure. Yeah, so we have an 8-hour institutional candle right here. And the beautiful thing about this is at the low, it's at the complete bottom, and it broke structure. You can see that it broke structure right here. So we're basically expecting EU to come into here, show us a schematic, and then catch that move up. Or a better possibility is EU is going to come down into this point of interest, which I refined down to like I think it was a 12-hour, maybe the 1-hour actually, I'm not too sure. Let's check this out quickly. Yeah, so I did refine this like up to here, up to this last institutional candle right here, but I did extend it down to this low just for a deeper stop loss. So basically our anticipation on EU is that it's going to react off of one of these zones, either this one or this one. That's basically what we're expecting on EU. And yeah, that's basically all I'm saying for EU. I'll update everyone. EJ, still waiting on the second red zone. We didn't get triggered in. We did get triggered in over here, but sadly we did get stopped out. So a good possibility is EJ is going to come into this zone and then show us that nice reaction, hopefully at least. But yeah, so that's all I'm really seeing for the upcoming week. I'll post all these TradingView links in the group chat below. So if you guys have any questions, just hit me up on Discord because I have to end the Zoom quick time. But yeah, I'm gonna go edit this, post this on the course, and yeah guys, have a good one. Peace out. So I'll share my screen quick time. Actually, I have like a 5 more minutes. If you guys have any questions, just like ask me right now, and I got you. You guys have any questions or not? Yeah, I got you, Maddie. No worries. What time frame you start with? Well, usually the daily time frame. Usually when I go from the higher time frames down to the time frame that you don't need any more information. So the way you analyze the chart is you're reading a story. It's like a book, right? Yeah, sure. I'm reading a sec. So it's like you're reading a book. You have to start from the start of the book and go towards the end. Trading is the start of the book starts at the higher time frames, and the end of the book is whenever you don't need any more information. So let's say you have enough information on the 1 hour time frame, then that's it. You don't need to go any lower. Let me mute you quick down. You can unmute your mic, I'm pretty sure.
Yeah, can you listen to me?
Yeah, what's up?
Hey, thanks for Zoom. I have one question.
Yeah, what's up?
um, when we have big side moves, and there's a liquidity upper and above this side move,
Yeah.
and it is taken from up and down.
Yeah.
In this situation, I am a little bit confused because I don't know on which move I have to prepare. You know.
Okay, I got you. I know what you mean. So it depends on what the trend is, right? You have to look at structure in the trend. If the trend is up, and you see something like this happen, right?
Yeah.
You see you have a low, you have a high, you have a higher low, and you have a higher high, and then you have a higher low, and then a higher high. But then the market goes down and breaks structure, right? If it breaks structure and then you have liquidity here and liquidity over here, the best thing to do is, because we did break structure, right? Because we did automatically did break structure, the best thing to do is wait for the liquidity of the highs to get taken out and look for an institutional candle above, and then catch the sell back down, right? That's because we broke structure. But if the trend is towards the downside and you see something like this happen, right? You see break of structure, and then you see liquidity of the highs, liquidity of the lows. What's going to happen is the lows are going to get taken out first, because overall the anticipation is to bring the market higher. So what they're going to do is they're going to influence buyers to buy right now over here, stop all those buyers, and then after we tap into an institutional candle towards the left, that's when the market's going to go out or go up to take out the stop loss of the sellers and, you know, target new highs. So try to stick with the trend. That's number one. Try to stick with the trend and analyze the structure. If the structure is going bullish and you do see a break of structure on the higher time frames, then take the buy, right? And if the structure is bearish, and you see a break of structure on the higher time frames, then take the sell. Make sense?
Okay. Thanks. Yeah.
All right, cool, brother. All right, if you guys have any more questions, let me know. And yeah, it ends in like 3 more minutes, so shoot your shot. Oh, I'm pretty sure I answered everything. Why do you go lower time frame? Alright, guys, I guess that's about it. So thank you guys for watching. Hopefully we can do more in the future. I'll post every single link in the Discord. So yeah, take care. Peace out. Alright, good zoom. Let's go.